Trump's confirmed win as US president had sent gold prices down more than 3% yesterday. Does this mean the golden era is over? Can prices bounce back to $2,700 in the short term? What risks will shape the direction of gold going forward? Find out more in today's As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, gold has taken a sharp dive, dropping below $2,700. A big reason for this pullback is that traders seem less focused on safe haven demand tied to the US election. With Trump's win, a surge in risk appetite could push prices even lower. Coming up, some key risk events like the balance of power in Congress, the fast rate cut path, and China's National People's Congress Standing Committee meeting could all play a crucial role in shaping where gold heads next. While last week's dip caught many off guard, today I'll still keep the focus on the outlook of gold going forward. But first, let's quickly go over the technicals and main drivers. Let's dive in. Taking a look at the gold against US dollar daily chart, we can see that just as the market was preparing for a run toward $2,800, the bear stepped in last Thursday and pushed prices from the top of the recession channel down to the bottom within a week, a pullback of almost 5%. Yesterday's drop of more than 3% was especially eye-catching, as heavy selling pressure pushed gold below $2,700 and past the September high at $2,685. And this decline has continued into today. If the bulls manage to gain some traction, they'll need to break back through the channel's lower boundary and $2,685 to make a run at $2,700. But if the selling pressure sticks around, then the 50-day moving average around $2,640 and the lower end of the September range near $2,600 could act as support. While even though yesterday's big drop might have shaken up some traders, I wasn't too surprised, to be honest, and I still think gold has room to recover. As I mentioned in last week's video, gold's current level statistically has only about a 5% chance of holding, so it's more likely to bounce back. Plus, looking back to the last US election in 2020, gold dropped by $110 on the day, quite similar to this pullback yesterday. I mean, of course, history doesn't repeat exactly, but it often rhymes. With election results in, the usual buy the rumor, sell the fact play has come into effect, easing safe haven demand for gold. Trump's win has also triggered expectations for things like tougher tariffs, tax cuts, and a larger US deficit, fueling some reflation concerns. The 10-year US Treasury yield just hit a 4-month high of 4.44%, and the dollar index has jumped above 105, both of which chip away at gold's appeal as a non-yielding asset. Trump's push for deregulation is also boosting US stocks, drawing in capital and squeezing gold's upward potential. So overall, the receding safe haven demand around the US election, along with a strong dollar and robust US stocks, is putting some near-term pressure on gold. But still, after the election theme phase, factors like Fed rate cuts, mounting US debt issues, and central bank gold purchases could shift the spotlight back to gold, supporting a more, moderate recovery over the medium to long term. With Trump's win mostly priced into yesterday's move, there are still a few key uncertainties ahead, which means short-term volatility could stick around. Here are three main areas the market will likely focus on next. The first one would be House control. Whether Republicans can win the House matters for Trump's policies. A red sweep could bring more policy certainty, and we could see less disparity between policy expectations and what actually happens. This could limit gold's upside a bit, whether from reduced policy uncertainty, a stronger US dollar, or risk appetite. But let's not overlook the potential boost to gold demand if tariffs are part of the agenda. The second one would be Fed's rate cut path. With recent jobs data significantly missing the mark, a 25 basis point cut in November is pretty much fully expected, but the scale of a December cut is still up in the air. The Fed will need to balance stimulating the economy against inflation risk. So if we see another December cut, that might offer a modest tailwind for gold. Last but not least, China's ongoing NPC meeting. I mean, the timing here seems quite deliberate, allowing China's policymakers to respond to the US election results. As a major gold buyer, any aggressive stimulus from China could involve proactive yuan devaluation and heightened recovery expectations, both of which would be supportive for gold prices. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!